Stock market conditions continue to be narrow and are actually looking narrower and narrower each day. Distribution has started to pile up on the indices, with heavy selling coming in last week. What's more concerning is that there aren't many stock setups, and the few stocks that were holding up are beginning to falter. When we look at the advanced decline line and the new highs, new lows, it is easy to see that this is not a broad-based rally. In fact, most stocks are doing much worse than the general indices, but even large cap mega stocks are now beginning to falter as well. Take Netflix, Nvidia, and Amazon as examples. Nvidia has been the clear market leader, but it is now below its 50-day moving average and looks like it may need some time to base. Netflix was setting up this week, but quickly fell apart. Amazon was acting quite well, but came in today on heavy selling. I took a small pilot position earlier this week, but quickly cut my position just above break even. My reasoning is simple. In a hot market, there will be a plethora of opportunities, and at this point, it's really not worth fighting the general conditions. There are a few stocks I'm watching closely, with Nvidia, Airbnb, Monday, Uber, Amazon, and Palantir being high on my watch list. While I'm bullish on all of these stocks long term, they do look like they may need some time to base over the next few weeks. Seasonality is also something I've been thinking about, since the September-October timeframe often provides difficult trading conditions. If the 1990 comparison I blogged about last month continues to play out, some additional basing would make sense here and would lay the foundation for a strong uptrend in the coming months. I am still confident that the 2022 lows will hold and that a long-term bottom is in place. However, the market is clearly signaling that this is not a time to be aggressive. The Fed is also meeting this week, which may be a catalyst for volatility. With all this in mind, I'm content to be cautious and wait. I'd actually prefer to see the market come in here. While that may seem odd, I believe a correction on the S&P 500 towards its 200-day moving average or near the 4,250 range would provide an opportunity for me to add more shares to my long-term account. As for individual stock trades, there's really not much to do here because the market is so narrow. Ultimately, I will get aggressive, but it will be at the right time when the odds and general market are in my favor. Until then, I'm happy to sit and wait for the market to signal to me that it's time to get busy. Wrist right, sit tight.